So you've lost your job. What do you do now? That's what we're going to be talking about today in this segment. Let's get moving forward. Welcome to the Plan Ranger, where our goal is to provide you with informed insights and a reasonable approach to managing your personal finances. So you find yourself in a hard position. You just lost your job. This is something that a lot of people go through every single year. And one of the reasons for making this video wasn't so much a question as it was, I know a lot of people who have experienced this downsizing recently during the pandemic. And so we thought we'd just kind of put it out there. You lost your job. What do you do now? First things first, stop, take a breath. This is a very challenging situation for a lot of people. Between the emotional, the social, and the financial ramifications, the world can feel like it is just spinning on its axis at 4 times the rate. Everything can feel like it's moving really, really fast, and one of the best things you can do to start is just take a beat, take a moment, right? And just so you know, my plan here is not to throw empty platitudes at you. Truth be told, the situation that you're in might just suck. It's a rough one to be in, and anybody that's ever been through this before understands how you're feeling right now. Truthfully though, there could be some good, there could be some silver linings to this, there could be some benefit. Some people need that push. They need that thrust to get them out of where they're at, to change, to adapt, to grow. And that might be you. This could be that opportunity. I mean, most people don't really grow much when they're in their comfort zone. They have to be pushed outside of it. And truth be told, this might not be the last time in your life you experience this type of personal defeat. So, I know that's not encouraging, but if you take this moment and you do slow things down a bit and you observe your behavior, your thinking process, and what you're doing right and what you could do better, then next time this happens, you'll be ready for it. And don't get me wrong, yes, it'd be great if you don't have savings now, you start saving so that the next time it happens, you're ready. But I'm talking about more mentally, emotionally, psychologically, you'll be better prepared for these types of defeats, these types of blows when they occur in the future. So maybe there's opportunity to be found just in that. I can tell you that if you have a 401k or retirement plan, then you're going to want to stick around for the end of this video when we start talking about that piece of it, because there actually could be a very significant financial opportunity for you with this occurring right now. So, but we'll dig into that in a second. So our first step is take a deep breath. Our next step is let's assess the situation. Let's see if it actually is as bad as you think it is. Right now I'm referring more to the financial side of it than anything else. We need to take an inventory. What do you have to work with, and what do you have to deal with? So in other words, what are your assets and other potential income streams that you can bring in right now? And what are your expenses and debts and types of things like that you have to deal with at this point in time? So those are the 2 things we really kind of need to take a pretty good look at. When it comes to your assets, ideally, of course, you have some savings, you have an emergency fund. And if that's the case, truth be told, you're probably not watching this video. But if you are, congratulations, you have just bought yourself some time. And that's really what money can buy. It buys options. It buys you the ability to choose whether or not you want to take that first job you come across because it's the best, or do you want to wait and find out if there's something better around the corner and take your time. It allows you to be a little bit more deliberate in your process as far as selecting your next job. So if you have an emergency fund, savings, good for you. Congratulations, you did a good thing for yourself. If you're like most people though, that's probably not the case. If you're like most people, you might be a little bit strapped, and savings might not really be an option. And so let's kind of walk through what some of the different savings and accounts you could go to are. You know, if you need extra money, first things first, obviously checking, then savings, any, CDs, things like along those lines. Regular investment accounts. I'm not talking about your IRAs or 401ks or anything like that. No, I'm not talking about retirement accounts. Although I'll touch on that in just a second here. You want to start with, do you have any regular investment accounts that you go to? Are there things that you could sell? If we kind of work our way through this list, then all of a sudden, okay, we arrive to retirement accounts, and what could you do? You could go to your Roth IRA. If you've been contributing to a Roth, there are some contributions there you might be able to take out, without any tax penalty, and that could help you float for a while. So those contributions could be removed to a degree. Then after that, you could look at things like your IRAs or 401ks or things along those lines to help you get by. And then ultimately, there's debt. Obviously, this is the one we want to avoid as much as possible. If you end up having to go the debt route, what should you do? Well, first things first, if you have things that you own, anything like, your house or a car, and you could do like a home equity line of credit, or you could do, a loan against your car. Some financial planners and people would take a different view on this. They're going to say, you know what, that's a secured debt, meaning if you really get into a bad bind, they can place a claim on those assets. They could try and repo your car, take your house. Those types of things come into play because they're secured against those loans. But they're going to be way lower as far as interest goes. You're going to pay far less interest than you would with, under the last option, which would be going to kind of unsecured debt, things like credit cards. Credit cards would be the most payment friendly on a cash flow basis, meaning you're going to pay less every month, or you'd have the option to pay less every month if you need to. The minimum payments would be lower than they would for a car or maybe a home equity line of credit, things like that, although that would depend. Your payment option would be lower, but your interest is going to be so much higher. You're going to pay 20%, maybe more for credit cards, and a car loan, a home equity line of credit are going to be, 3, 4, 5, 6%, somewhere in there. So, there's some options there as far as that goes. If you have student loans that you're dealing with, you might be able to call and get a deferment on the payments, or, put a hold on those while, until you find a new job. Sometimes it can be beneficial to talk to your lenders and see if they'll let you go through any type of forbearance, or basically stop making payments until such a time as you have a job again, or a set period of time. But you might also want to be cautious with that as well, because ultimately, frequently all those payments that you owe can all come due at once. So if it's possible for you to stay current on your payments, obviously that's the optimal way to go here. So as far as your income goes, how can you generate more income? Ideally, all of these things we're talking about, accessing savings, going into debt, hopefully that's not really much of an issue. Hopefully you can fill in your income gap, or at least cover your expenses as much as possible through things like unemployment insurance, which you should try and file immediately for unemployment insurance. Maybe get a side gig. And when I say a side gig, I'm not talking about passive incomes. This is not the moment to indulge ideas of maybe I'll start my career in multi-level marketing or network marketing, and I'll this is my moment to make my 6-figure career happen while I'm doing nothing, right? All the passive income streams, they might be able to work, but now is not the time to channel that activity. Now is the time to do something that can make sure you're covering your expenses. And that could include a side gig, something like driving Uber, delivering pizzas, waiting tables, hop on Fiverr, on Upwork. There's all these places out there now, especially online, where if you have a skill, you can offer up your time for money. You can do those things on a freelancer basis, and that might help you float your way through until you get your next job. And when it comes to finding your next job, who is in your network? Think about your friends, your family, your coworkers. Put feelers out there. Talk to people. Let them know that you're looking. Don't be afraid to engage the people you know. They're probably going to be delighted to help you. So reach out to them and let them know that you're on the hunt. That's a great step too, as far as finding your next position here. Is right now the moment that you should go off and start your own company? Some people view these moments as, well, okay, this, hey, you just said this is the push I need to get out the door and to change and adapt and do those things. This could be the time for you to do that. Maybe. The question would be, do you have a plan in place already? Do you have infrastructure? Do you have enough savings to get yourself through at least 6 months, ideally a year? If you can't survive that amount of time, probably more towards a year, to be honest with you, your personal expenses and all that stuff, if you can't survive during that period of time, then you probably need to find another job and continue to hone your business idea to a point where you can go out and do it with, very deliberately choose the time you start your company. I'm not saying right now couldn't be the moment. It definitely could. And if you have that idea, if you've, done your market analysis, if you've run all of your business analysis and you've got the idea that's fundamental, that's ready to go, maybe now's the time. But you really need to make sure that you can cover your expenses for at least 6 months and probably more towards a year here. So Think about that a little bit. Okay, so let's talk about some of the financial decisions you're going to have to make now that you've left your employer. At the top of that list would be your health insurance. If you've ever heard of COBRA before, or you've ever been on COBRA, it has this reputation for being so expensive. COBRA is merely the program that allows you to continue your health insurance from before. COBRA is not the insurance itself. It just allows you to keep your previous insurance that you had under your previous employer. So it's not COBRA that's expensive, it's your health insurance that's expensive. And maybe this is kind of a moment to give a tip of the hat to employers for picking up the bill on this stuff. Once upon a time, they used to send out, in the early, I think late 90s, early 2000s, when companies would send out, total compensation statements, it was a bit of a laugh for a lot of people because ultimately it was your paycheck and then a little bit as far as benefits go. Nowadays, if you make $50,000 a year, your total compensation could be $80,000. Between your health insurance that's covered, Social Security and all those things, you might sit back and say, look, I make $50K, but you're actually a $70,000, $80,000, $90,000 cost for an employer. And a lot of that has to do with health insurance. So when you pick up COBRA, you're just paying that, $1,600 a month that your employer was paying before. You were just paying $200, $300, $400, $500 of it. Now you have to carry the full burden of that. So for a lot of people, COBRA might not be the way to go just because of the sheer cost of it. Because you've just lost your job, this is a qualifying event under the Affordable Care Act. So now you can go to the marketplace and try and find a plan for yourself. And if you're that $50,000 employee, you're probably gonna get a pretty decent subsidy, which means you'll probably be able to get a pretty good plan for a much lower cost than COBRA, I should say. So kind of first things first, you have that COBRA option, then you can go to the Affordable Care Act, the marketplace. And then finally, if none of those work, if all of those are still too expensive, one of the things you might want to consider is short-term medical or short-term healthcare insurance. Now, these plans are issued state by state and they kind of vary depending on your state's rules, wherever you're at. But a lot of them will only go for 6 months, or they have a set time frame as far as the amount of coverage you can get before you have to reapply again. They're pretty stripped down. They're pretty basic. They're basically like major med policies. With the deductibles and everything out of pocket, if something really bad happened, you could be on the hook. Your out of pocket could be $15,000 or $20,000. It's pretty high. But commensurate with that lack of benefit, the price or the premium is pretty low too. So you kind of have to weigh those options as far as your health insurance goes. But for sure, you want to have something. So whether it's you stay on COBRA for a few months, or then you go, the marketplace, or finally you do some short-term health insurance, somewhere in there you need to make sure you've got coverage for health insurance in there and are managing your risks. So in addition to health insurance, you have your life insurance, and sometimes disability too, sometimes both of these, but usually life insurance is portable, where you can basically take the life insurance from your employer and either take it to a new employer or convert it over to an individual policy, meaning you own it now. The tricky thing here is that when you convert a life insurance policy over, it's going to go from a term life insurance policy, generally speaking, to a permanent life insurance policy, which greatly increase the costs, but you can have it for the rest of your life. I won't go into the pros, cons, pluses, minuses, or differences between term life and permanent life insurance. We'll do that in a separate video. Just know that you have the option, generally speaking, to keep your life insurance. And where in this situation it could be beneficial would be if you have some hardcore health problems and you would not be able to qualify for life insurance on your own, you might want to consider converting some or all of your life insurance over so that you can keep it. That's the premise of conversion. You don't have to do a medical or anything like that. You just get to take it from A to B with nothing in the middle. I once had a colleague who got a dead guy insured for life insurance, which isn't supposed to happen. But in this 30-day window to convert, the guy was qualified, the family qualified, they filed the paperwork, and so they got a death benefit on a person who was already deceased, which is pretty incredible. So just so you know, that is always an option. If you're healthy though, and you need a bigger death benefit, which is most people who are working right now would fall probably into this category, you're probably better off just going out and, getting a hold of an insurance agent and trying to find out, hey, what's the lowest cost insurance that you can get me? Whether it's a 1-year renewable term or a 5-year or a 10-year, most places it's 10-year, but there are some places that issue 1-year policies out there, so you can check into that. Just know that the cost will go up every single year, but This might just be the thing that duct tapes the situation together while you move to your new employer. There's a lot of benefits, though, to owning your own life insurance portfolio and your own policies. But again, we'll talk about that in another video. It's just this might be a time to kind of take advantage of that. Finally, the big one is your retirement plans. What do you do with those? If you have a 401k, 403b, 457, pension, cash balance, there's any number of retirement plans that you could have right now that you could be eligible to roll over. First and foremost, when these types of things happen, you might start getting calls from financial advisors, investment advisors, because these are called kind of money and movement opportunities for them, where your plan can be rolled over. So let's kind of look real quick at some of the differences of why you might want to keep it in the plan versus why you might want to roll it over to an IRA. First and foremost, if you want to keep it in the plan, the reason why would be costs. The cost of keeping it in your, the employer plan could be lower in the 401k or the 403b. And then in addition to that, when you go to a new employer, if you wanted to transfer your 401k from the employer you just left to your new employer, the benefit there could be that you can take loans against a 401k. You cannot take loans against your IRAs. So if you ever think you're going to need that money, and I don't suggest using your 401k as a piggy bank here. That's not the premise of it. It's supposed to be for retirement, long-term accumulation and investing of assets. But if you want that ability to take loans, then that's what you would do. You would basically leave it in your old company, roll it forward, or I should say transfer it to your new employer. And then inside of that, you'd still be able to take loans against that balance if you needed to at some point in the future. But again, not a great reason to keep it in a 401k. The real reason you keep it there might be cost. That'd be about it. The pitfalls to the 401k, generally speaking, and just, same thing with a 403b or a 457, generally speaking, your investment options are going to be pretty limited. And the help that you can get investing is going to be limited, if even existent, at all. Most of the time, it's just somebody who will come in and tell you, hey, here's kind of what your asset allocation could be. But if you ever want to get a little more nitty gritty into the details of investing, inside of a 401k, it's going to be pretty limited. You might have an option, a list of, 8 choices, 15 choices, 25, or, if you have a really nice plan, 40 or 50 choices to invest in, but that's still not great. Versus if you roll it over to an IRA, pretty much the entire investment world opens up to you. You can take the money anywhere, do almost anything with it as far as investments go. Any mutual fund family, any, ETFs, stocks, bonds, UITs, there's all these different options that would be at your feet. In addition to, you could take the money to a financial advisor or an investment advisor and get some help there if you need it, get that guidance. And I do think there's a lot of value to that. Regardless of what other opinions might be out there is a lot of value to working with a financial advisor or an investment advisor. So that might be something that you want to do too, as far as what do I do with my 401k? Let's talk about one last option though, with this. And that is, once you've rolled your 401k, once you've transferred it over to an IRA, just so we're clear here, everyone always uses the term rollover. These things are kind of used ubiquitously, but a rollover is actually when you take the money from your 401k, your retirement plan, and it's made out to you. It goes directly to you in your name, and generally 20% would be withheld in this situation. So the rollover is going to go from the 401k or from the retirement plan to your checking account, at which point you have 60 days to get it out of your checking account. Otherwise, that whole thing becomes taxable. So, if your employer if you've got $80,000 in your 401k and they send it to you put it in your checking account. You have 60 days to get it out of that checking account and into an IRA or another qualified plan. Otherwise, that whole $80,000 is going to get added to your income for that year. Okay, which leads me to my next point. And at the top of this segment, I mentioned that if you have a 401k retirement plan, you'd want to sit around until the end for this part. Here it is. And this is something that some people take advantage of, but not everybody. And it really depends on your circumstances. And I'm going to tell you, you really need to dot your I's and cross your T's when it comes to this. And I strongly recommend working with an investment advisor, a financial planner when it comes to actually executing this move. But if you do it, it can save you a lot of money in taxes. So if you don't like taxes, this one's for you. This is called a Roth conversion. Maybe you've heard of it, maybe you haven't. But Roth conversions are great tools to be able to take advantage of when you're going to have a year where your income is suppressed for one reason or another. Maybe you started a business. Maybe you took a hardcore loss on some investments that are treated as ordinary income. Or maybe you're in a year where your income is going to be lower because you weren't working, because you got laid off. So let's say you made $100,000 and now, this year, because of everything, your layoff, you're only going to make $40,000. You have a $60,000 window here that you can work with, where you could take money from your IRA and convert it over to a Roth IRA. You pay the taxes on it this year, but then you never pay taxes on it again. Whatever amount of money, whether it's all of it or some of it, you take $20, $30, $40, $50,000 and you convert it, take it from being a traditional IRA, pay the taxes on it, and now it's a regular IRA. I mean, that 20, 30, 40,000, that's just getting added to your ordinary income that year. It's, your tax rate would be the same or less than normal, or would be in the future. And now you'd never pay taxes on this money ever again. It's a fantastic strategy to be able to take advantage of in a time when things really aren't going great for you. It actually provides a pretty significant financial incentive for you. So that is something to consider if you find yourself in this position. That's all I have for you today. Hopefully that helped. If you have any questions, comments, thoughts, please feel free to leave them down below in the comments. Subscribe to join the Plan Ranger community. We would love to have you as part of it. And until next time, thanks for taking the time. I hope this helped.